Okay, hello and welcome everyone to this live intraday strategy session on SB Trade Desk. Good to be with you guys today. Okay, so lots to talk about. We did get the RBA interest rate decision. They did cut rates, as surprising as that was to a few. You know, if you look at the Credit Suisse overnight swaps, guys, heading into the release, there was a 68% chance of a 25 basis point cut. In fact, if you look at the 12-month expectations, this still looks like there's another 50 basis points in expectations for lower rates from the RBA. Now, while the consensus said that on CSST, if you look at the majority consensus estimates, they didn't actually expect this. Long story short, we're not here to deviate or dictate policy. We're here to trade it. So did offer some nice opportunities on the Aussie crosses. We'll take a look at that. We'll go over the setups that are featured on the intraday page, and then we'll open it up to any questions and pairs that you guys want to look at. So let's jump right in. The first thing that we've been following, or the last couple of weeks, has been this Aussie Euro-Aus chart. A good alternative to trading the Aussie on the way up. I do think this was a well-suited one. The main focus heading into the week, guys, was this 146.47, 146.50 range. Okay, you have a 50% retracement from the December decline. You have a median line parallel, dates back to last year. We've seen a couple of rebounds off that. Okay, and even near term, there was a structure here giving you resistance right up that region. As I noted in the report, we started off the month on a constructive foot, and the trade remains constructive, certainly off that rebound in the opening range break we saw last month. The only caveat was that we were coming into this main resistance. So the trade setup is as such. You wait for the weekly opening range. If the weekly opening range gives you a break to the downside, okay, then you start to think correction. You start to look at 43.80, 43.60, and the subsequent support target at 42.57, 42.60, depending on where this median line is. Well, that's not what happened, right? The Aussie sold off. You saw a topside break of the weekly opening range, in which case you're looking for 47.16, and on a higher stretch, 48.08. Here's what the live chart for Euro-Aus looks like now. Okay, so there's the daily chart. You saw that break into 146.47. That was a major resistance target we talked about heading into the start of the week. Momentum profile still looks pretty constructive. You're heading into 60, so you want to curb the topside appetite until we see it close above 48.08 at this point. But this is as clean an opening range break for a weekly basis as you can get, guys. We don't like to drop the monthly bars here unless we have a few days in, so we'll draw that in now as we start off February trade. But at the end of the story is, near term, towards the end of the week, you're looking to stay constructive above 47.50, which again is not only going to be the opening range high for the week, but also that 50% retracement and key resistance. I did get an email yesterday from one of you guys. Great feedback, by the way. Always appreciate your feedback, guys. Feel free, info@sbtradedesk.com at any time if you have any suggestions, ideas. Feel free to share them with us. We're really open to expanding the service so that it suits you guys best. But a question was brought up yesterday to me that you guys would like to see the reference points, both for the Fibonacci retracements and extensions and for the formations, the pitchfork formations that you draw. This is the best place to get that, guys. From a scalp perspective, it's going to be very hard for me to tell you all the reference points for all of these charts, but for sure you're in the right place. So if you have any questions, or if we go through these setups, guys, and you have any questions as to the reference points that are being used, feel free to drop the question here. Long story short, the break above 46.50 put us constructive. Here's what the scalp looks like now. Okay. Now, obviously, that release, you have to have quick fingers, but heading into it, and what we noted yesterday, was the weekly opening range. Very clean. Asia Pac comes in. On Sunday, you check the highs, which was key resistance that we just noted. Okay. You come back, test those lows. U.S. Open comes online. We test those lows again. Still holding that median line parallel as support all the way into the close. RBA interest rate decision. Boom. Okay. Any long exposure you took on that trade should have been against the weekly low. Once you make it through the weekly high, you're looking at, like I said, 47.15 or 47.12 there. The extended break target was 48.08, and that's now hit as well. So the question becomes, Mike, okay, cool, that's what happened. Where do we go from here, right? So on an objective standpoint, again, to respect the weekly opening range, we're going to remain constructive while above that 46.50, 46.47 region. The same region which was resistance, now support. So we'll be looking to buy pullbacks. We'll be looking for resistance, trigger breaks, and momentum to get on the long side while above this region. Soft targets were at 48.75. We just missed that one here on this last stretch. A subsequent target's at 49.50. And then a little bit more of a key resistance range is going to be this 50, 38, 50, 18. In fact, let me go ahead and adjust that. So guys, when you're taking your retracements, a lot of times we'll get questions on, do you use the 786, do you use the 764, what fibs are in focus. And at the end of the day, guys, that's determined by price action. So I'll always be, start off with the default 786, but if I look at this and I bring in the 764, I think it'll make my target line up a little bit better with price action. There we go. And you can see catching this pivot zone here early in December makes a little bit more sense, right? So we'll go ahead and adjust that region near term to right here. And that's the subsequent topside break once we get above 49.50. Okay. So a couple things you can use for this trade. You want to look at this former upper median line parallel, which is now offering some support. So on an intraday trade, scalp, you get a pullback and then a long trigger in momentum, you're going to take a trade against that. Topside objectives, like I said, are pretty clear, 48.75, 49.50, and the 150 handle. Keep in mind, okay, I don't have the ATR pips installed on this computer, but quarter of the ATR is still about 52 pips. Okay, you're looking at a trade that has well over 200 pips on a daily page, guys. So keep in mind that this is not going to be your euro dollar, your Aussie dollar scalp. The ranges are much bigger, and as such, you need to let your profit targets and stops reflect that as well. Eileen says the reference points on your charts could be seen if you include the scroll out version picture of your charts on the scalp page. Eileen, I was actually thinking about doing that. Guys, is it okay if you're looking at a scalp chart on the page? I try to maximize so you can see the weekly open clearly so that you can see sort of the levels that we're trying to scalp. Is it okay if you were to see a chart, for instance, like this on the scalp page? Would you guys be able to handle that? It's zoomed out. You can see all the reference points, but certainly all the price action, everything gets smaller. If you guys are okay with that, I'll definitely take an approach like that, guys, on the scalp page, and I'll give you all the zoomed out charts. But just note that, it's not going to, it might be a little bit jumbled just because we're trying to include all this data. Stefan saying yes with an exclamation point. Tiffany says fine with me. Eileen says yes, okay. If you still have the close-up charts too, I can do that, Eileen, but you're going to end up having to scroll a heck of a lot to get through the page. I already have a problem with how long the page is right now, guys. I'm working on a layout with some guys to try to make this a little bit more tidy as we try to clean things up for the launch. But if you guys would rather see that, Eileen says it's okay to scroll. Jay says I'd rather see close-up charts as they are. Okay, so it's a little bit in between. This is what I'll do, guys. I'll try to mix it up a little bit. I'll try to get you the close-up charts because, Jay, I'm with you. I'd rather see those clearly defined ranges on a real micro sense because we're looking to scalp. A layout could include a button to a zoom in. Okay, Stefan, there's an idea. Maybe I can make it so that when you click on these charts, it actually gives you the zoomed out. Gert says, don't mind, but just the one per time frame. Right. So, Gert, you don't want like 4 or 5 charts for the one time frame, right? You just want the 1 30-minute chart. You don't have to click on a few. I get you. That makes sense. Great. Well, guys, listen, I really appreciate the feedback. I sincerely do. So definitely try to keep these forums as casual as possible. So feel free to throw out any ideas on these topics. Even if it's just once a week, you include the longer zoomed out charts. Tuttle, that might not be a bad idea either. You know what I could probably do, Tuttle? I could probably just make one post with all the charts that are highlighted on the intraday chart here, completely zoomed out so you can see that. It's not a bad idea, Tuttle. Thanks for that, man. Actually, I think I'm going to run with that one. All right. Great. Tiffany says, great idea. I would like that more than any other change, says Tuttle. Well, you got it, man. I think it's a great idea. So we'll stick with that moving forward, and I appreciate it. Again, keep the ideas coming. But back to price action. So as far as the Euro Oz is concerned, guys, it's a beautiful trade, man. It's a beautiful trade. So we'll continue to favor the top side above 147.50 near term. And like I said, those top side targets are pretty clear cut and readily identifiable, I think, at this point. Any questions on Euro odds before we move forward? Okay. One other thing I just want to highlight, guys, is, ahead of the opening range break, which obviously happened on the RBA here, the momentum signature here was very clear not to touch this thing on a trend type of trade. One thing that we don't talk about here is, a lot of times for the scalp, guys, we want to wait for the opening range to break to give us that conviction on the directional bias. But within the opening range, there are opportunities on a longer range scalp like this that's giving you 50 pips on a daily basis. Certainly, there is opportunity to play these ranges. You don't want to look at a 30-minute chart. The only thing I want to highlight here is the 40-60 hover in the momentum signature. This is classic ranging conditions. And when you see markets do this ahead of the range break, a 5-minute chart will offer pretty decent triggers. You're just looking to buy at support and sell at resistance. So even ahead of the range break, there is opportunity. That being said, we'll look to stay constructive above 46.50. All right. Next trade on there was dollar yen. I put out a piece on this on Daily FX yesterday. You might have seen it. We're working with the same exact levels that we had last week, guys. In fact, for the dollar yen, for those of you who know me, I'm typically very estranged from the dollar yen. I think it has been very, very clean from a scalping standpoint. Trend traders are really getting chopped up here, and they're very frustrated because they're either trying to press the continuation higher in the broader trend, or they're really getting smacked down every time they try to short this for a little bit steeper of a correction. For us, the levels have continued to play out really well. So the main support was 117. That's the bullish invalidation level. Okay, heading into the close yesterday, there was also converging right on the key support in the opening range low. The broader directional bias from a scalp standpoint stayed bearish sub 118.09, and that's how we started off the week for the dollar yen. So here's what that report on Daily FX looked like. If you guys didn't see that, or if you're not on the mailing list, there's the link right there. All right. And the basic highlight was this consolidation feature for the last 2 weeks. Okay. And this is actually a good lesson on gaps, because I do get a lot of questions for gaps. Will the yen seasonal direction for February play now too? I don't know, Eileen. I think it's in an interesting position where the yen is right now. From my standpoint, for a scalper, for near-term trading, I don't really stress that so much because we're taking our directional biases on a day-to-day, week-to-week approach. Longer-term traders, yeah, the seasonality aspect of it is going to be huge. But Eileen, I don't want to stress that too much. I'm playing the levels as they come. So the point I wanted to make here is this, guys. The way I trade gaps, and my favorite way to trade gaps is this. Once the gap is made on the Sunday open, you don't necessarily want to fade the gap right away, right? A lot of people will ask, Mike, how do you scalp the gap? Well, there are things called breakaway gaps where the gap will break and then continue in that direction. A perfect example is right here in dollar yen, okay, back at the start of November trade. Okay, you got that gap right at the open, and if you had tried to fade that to fill that gap, well, didn't really work out, did it? So the way I trade gaps is this. You wait for the gap to fill. Once it's filled, that's the opening range that you stress. Okay, I don't necessarily want to play the fill. I want to play the break of the range that's created to fill that gap. I'll show what it looks like in the real charts in a moment. Here's what the scalp looked like to start off the week. This was the exact thing I'm talking about. You have a range. Here's the gap. You got open to the downside. You filled that gap. You pushed a new high, which held throughout the session. This is the range that's now in focus. Okay? A break above this puts you back on the constructive approach. Keep in mind that the 118 level is right there. So that was our bearish invalidation level to begin with. So while the opening range is just below that, this is what we're going to use to invalidate the long side, or the short side rather. And with the same respect, if we break the lows, which is that support at 117, that's a break of the opening range, and you look lower. Okay? So you can view this article at your leisure. here's what the live dollar yen chart looks like. So on the daily, okay, you saw us, we filled that gap, we pulled lower and held below, we closed below the range that we've set here for the last 2 weeks, okay? So there is a risk for a pullback. The one thing I noted in the report is that the momentum signature is still sitting on that trigger. You got a false break of that trigger earlier in the month on December, but this is now, you know, a validated 3-point trigger. So again, that's still holding support on the daily structure. A close below it really solidifies the corrective stance on the dollar yen. Here's what dollar yen looks like on the intraday. All right. So there is, you know, the weekly opening range. You fill the gap. You're waiting for a break of this gap. As soon as that gap breaks, you'll get the conviction on the directional bias. That being said, we came into this week looking lower, right? So right off the bat, we're looking for short triggers irrespective. You had a couple of opportunities in overnight trade. Obviously, yesterday when we published the report, this was actually a really clean opening range break for Asia Pac, okay? So that's the downside break. You're looking for shorts. You're looking for profit targets on this one of 35, 30 pips. Major key support and the opening range low is still going to be determined by the 1699, 1690 region. Okay, so I'm still looking for short scalps. If you look at the momentum signature, it still looks pretty bearish. Resistance at 60, resistance at 60, resistance at 60. Of course, the 40 level hasn't given out, so you don't really necessarily have a very strong down bias as it stands right now. We'll need to see that break of the month of the weekly opening range, but still favoring short side while within the confines of this formation. Any questions on the dollar yen? Eileen says, okay, makes sense. Euro dollar is flying away. Yeah, euro actually does look like it's ripping a little bit here, guys. Fresh new highs. We'll go over that in a moment. But before we do, any other questions on dollar yen before we let this one go? If a break in Asia Pac occurs while the London opening range is still being built, how do you deal with that? Great question, Pooja. If the break for the Asia Pac occurs while the London opening range still is being built, how do you deal with that? It's not, Pooja, you take it at face value. If the opening range breaks, it doesn't matter. That break movement and the Asia Pac opening range could be setting the London opening range. Meaning, Pooja, let's say this is the start of Asia. You set a low, you set a high, and you're saying, what happens if this high breaks as we're opening up London? Doesn't matter, I'll take that trade. That stretch might be setting the London opening range, and inevitably that might break to the downside, I don't know. But that doesn't invalidate the trade to the upside with the break of the Asia Pac opening range. Does that make sense, Pooja? The only thing I want to stress is this, guys. If you're trading on a session opening range basis, then you don't hold that bias throughout the course of the day. You only hold it, through towards the end, mid-session. Okay? So if the Asia Pac opening range breaks to the upside, doesn't mean I'm holding it, holding that long bias all the way through the U.S. Nope. That's just into the latter part of Asia session, and then we'll shift our attention to the subsequent opening ranges. So Pooja, I hope that helps. I hope that makes some sense. She says yes. Awesome. Let me know if I have any more, if I can clarify that any further. All right. So as far as the dollar yen is concerned, I don't have any active triggers to the short side that'll really put this thing in motion. More so, I'm going to be waiting for a break of that gap range that we made on Sunday. Still, for me, leaning towards a short side move here, or maybe even something wicked where it spikes into 118 and then it turns around and takes out 117 on the short side. Keep in mind this, guys. We do have a major event risk on tap on Friday. Obviously, tomorrow you have the EDP employment report, which is going to be sort of an indicator for what we should be looking for on Friday. The non-farm payroll report on Friday is going to be the highlight of the week, and certainly very strong correlation, right? Not just with the dollar, but with the yen, as the yen tends to move with U.S. Treasuries. So typically a good mover on NFPs, and definitely depending on where the yen is, should be a nice play for that release. Pooja says, thanks. I was missing out some good trades because of this. You mean when the opening range breaks and it's just opening? I hear you. I hear you. Yeah, everything needs to be completely as objective as it can, Pooja. If you're looking at the Asia Pac opening range, that's the range you respect. The only thing I want to bring to your attention is the timing of how long you hold that bias. But by all means, that's a legitimate trigger, even if it's just opening up London. All right. So we will look to see, again, what dollar yen does. If we come into this resistance level right here and you see a momentum trigger on the short side, we'll bring it to a tighter time frame in a moment here. Just take a look. But 60 hold followed by trigger break can typically be a nice trigger. You do get some ISM data out of the United States from New York about 14:45, so a little bit more to go before that hits. Okay. Stefan says, should I assume Twitter updates are by Jamie, called 117.50 as resistance this morning? Maybe it would help who publishes the tweets. So we both publish on that stream, guys. I try to indicate to you when it's me by writing intraday at all. Anytime I'm discussing a trade setup, he'll try to throw out the swing comment there for his trade setups. But guys, there's really no logistical way we could break up that Twitter feed for each of us. We have to reconcile them already with members that are signing up, so it'd be a lot of work. But Stefan, I'll let you know. Typically, I'll write intraday, or you'll see an MB or something to let you know that I'm looking at it from a scalp standpoint, whereas Jamie obviously is looking at a little bit more broader range. Okay. Stefan says, okay, intraday versus swing is awesome. Right on. Right on, brother. So here we are. This is the 60 range. We're looking at that momentum at resistance. We're looking at price at resistance. Let's bring this into a 5-minute chart. Okay, so that was actually a decent trigger that just gave up to the upside. As far as trying to fade it, don't necessarily want to do that at this point. So you see how when we take a look at a 5-minute chart, guys, it really gives you a little bit more of a flavored picture. Okay, so here's what the 5-minute looks like versus the 30. Okay, the 30-minute, you're coming into 60, you're a little bit hesitant, you have trendline resistance here. It's something to be cautious of. On the 5-minute, the momentum signature looks to be shifting. So in fact, at this point, I'm actually expecting that we could see a break of this top side. Why? Look at from the low that we made. Okay, here we are above 60, above 60, above 60, pull back right at 40. Above 60 means that we could be seeing the momentum signature shift here. Okay, so I wouldn't necessarily try to fight this and short it just yet. We need that trigger to come in on the 5-minute. If you are looking for a trigger, this is what I'd be taking into account. Okay, and there's what they look like side by side. So here's the break, as we just talked about. Watch, you still could get a decent setup if we come into 118 with a compelling short trigger. That would be a very favorable entry as far as I'm concerned from risk to reward. But at this point, we want to sort of sit tight before trying to short this thing at this level. Okay. Basic trendline resistance also has a break here. So we're going to curb our appetite for the shorts just for now. I will be looking for short entry if we get closer to the opening range high, or if we see a test of this 118. Like I said, the 118 barrier is going to be the bearish invalidation. You see that give out, all bets are off in trying to short this thing near term. Questions on the euro? On the dollar yen. Pooja says, Jamie's charts are typically black and white and look very different. Never been an issue. Pooja, I figured that as much. When we first started, me and Jamie we had a long discussion about using the same charts. I actually do use TradeStation as well, but I think for your benefit, that's exactly what we were thinking, Pooja. It might be easier, especially for those of you who've been following us for a while, just to be able to identify by the chart, who is disseminating information. So hope that helps. Was there an operative short trigger at around 6 a.m. New York on the dollar yen? Sure was. Sure was. This is the operative trigger I would have been working with. Now, well, let me adjust that. That would have been the better trigger to use. A couple things I'll just note on this that would have made this operative to me. This trigger actually, Pooja, I would not have taken. Okay, why? Well, this actually negates the exact thing that we'll typically look at. A 60 break in momentum means I'm not really looking to fight the shorts. Price action is not at resistance, so I don't have a strong resistance level to trade against. And this is not something that would necessarily be, something I'd be interested in. This is, okay, why? And I've said this, and SB a couple of times on the webinars, guys. My favorite triggers: divergence into the highs, followed by trigger break. So you can see here, if I hold this cursor, you can see that this is a slightly lower high, and it doesn't matter even if it's the same high, guys. Same high in momentum, extreme in price is divergence. You're looking for the oscillator to not confirm an extreme in price. So price made a new extreme, new high, the oscillator didn't. Momentum followed by a trigger break, I'll take that 9 times out of 10. Okay, I'll take that 9 times out of 10. So that was actually a decent trigger. Again, on this trade, you're looking for about 30 pips, so you would have just, depending on where you got it, you would have just been shy to barely making that 30 pip run. This is the trigger that would have gotten you out of the longs. Okay, don't forget, guys, when you take the momentum triggers, when you take a trigger break, and this is what enters the trade, always have a resistance break or an opposing trigger that takes you out of the trade. Always. So anytime I jump into a position, right as price is developing, even if it's moving in my favor, okay, from a momentum standpoint, what would get me out of this trade? And a break like that, specifically with a move subsequent through the 50 region, would have had me dumping all short exposure. So still would have been a decent trade to the downside. Pooja, does that make sense? Tiffany's saying, did you say that you wouldn't have taken the RSI because the RSI went above 60? Well, typically, yeah. On a move like this, let me make sure that you're on the right page here, Tiffany. On a move like this, yeah, I wouldn't necessarily take it right after breaking 60 because, in fact, that's shifting the momentum signature higher. I would have taken this one because you had divergence into the highs. So that would have been something I would have been more interested in. This one right here, you're just selling a 60 trigger. Right? And the price is not at resistance. So there's two aspects, guys. There's two aspects. Price needs to be somewhere, and the oscillator needs to give you that signal. So cool. Let's say I'm looking at it subjectively. I see a trigger. Let's look. Well, price is not at really resistance. We just broke 60. It might be better off to wait. Oh, now we make a divergence, adjust the signal. That's operative. That's operative. Tiffany, make sense? It says thanks. All right. Tuttle says, or a 40 hold. I'm not sure what you mean by that, Tuttle. Pooja says, yes, makes perfect sense. Have to be extremely nimble on these trades, though. Absolutely, Pooja, and especially things like the dollar yen, right? If you're trading Euro Aus, guys, you have a 50 pip quarterly ATR. Yeah, you can wait for a little bit more conviction, pick and choose a little bit more meticulously. On a trade like this, you're looking 30 pips per scalp, and you're looking at a trade which I don't think anyone's going to argue has been in some major radical consolidation, okay, ranging action for the last couple of weeks. Yeah, you want to be super nimble on a move like that. Tuttle says, for getting out of this short, it's 40 hold. Right, absolutely, Tuttle. Great point. So remember, guys, once we take that short, a trigger break here would have gotten us out of that trade, right? But also, Tuttle's 100% right. The hold at 40 suggests that you're seeing a little bit more of a turn here in momentum. Good point, Tuttle. Right on. You are noting some golden rules. How about a cheat sheet for members, Stefan says. Stefan, there's a lot of stuff in the pipeline, guys, coming out. Don't worry. There's a lot of educational material we're working on to really set the strategy clear, make sure that new subscribers sort of have a go-to plan to walk them through the strategy. That being said, you guys are in the right place. You guys are in the right place. So until we get that material up and running, I don't want anyone to feel any type of apprehension asking any questions you might have. Stefan says, cool, need the education. It's on the way, my friend. And as always, your comments and suggestions are welcome. Okay, so that is dollar yen. We're seeing this topside break near term. We're going to see how this pans out. Again, we're now above that near term trend line. If we break back below this, guys, and you get a compelling short, this would actually be a nice signal to trade against. In fact, remember, the opening range high comes in at 1786. So we'll see what the U.S. Open looks like in just under half an hour here. All right. Brian says, thanks, Mike. Great combo between you and Jamie. Yeah, some white paper would help. You got it, for sure, as far as the education is concerned. Brian, was that you who sent the email about March and the expo? I think it was you, no? Ah, yes. Yeah, so, dude, we'll definitely we'll look forward to that for sure. We'll try to clear up some time. We were planning on kind of making an appearance at the expo anyway, so we'll get in touch with you as we get closer to that time frame, but looking forward to it, man. I will definitely be looking forward to cracking a drink with you and Jamie at some point. All right, so if the charts don't freeze, we'll move on to the next one. He says, sweet, I'll be there for Sunday. I got you, Brian. All right, man. Yeah, we'll be in touch. We'll be in touch. Okay, guys, give me one moment here. Looks like we have a little glitch on the platform. Sometimes they'll fix if you just wait it out. So the other trade that we've been following after dollar yen is the Kiwi Yen. And what a beautiful trade it has been, my friends. What can I say? It's been probably one of the best performers, I think, right after the Euro Oz. I will definitely say this is probably the second best performer so far. So, you know, the major trade was the break below 87.50. I don't want to bore you with what happened already, but this was the major drop. We came into towards the end of January noting, listen, 85.80 and just below it. You have a 2013 trendline support, which has been very well respected by the markets. You have a 764 retracement off that October low. You have the August lows. You have the May lows, right? And actually, if you go back deeper in time frame, there is some highs that have been made on this major pivot. So we broke below it. This is the near-term bearish, okay, invalidation level. We came back to test it yesterday's resistance. If we look at the scalp chart, price was coming right into a nice resistance level at 85.65, so the opening range at that low, near-term structure here as well. And we said in the accompanying notes, look, you know, the broader trend remains weighted to the downside. We're going to wait to see what the opening range does. It looked like it broke towards the upside here ahead of the Asia Open, but look what momentum did. 60 hold, and that's as solid as it gets, guys. Solid as it gets. So right off the bat, I'm not buying the upside break. I'm still looking to play the shorts, looking for triggers, looking for opening range breaks. Well, panned out pretty well. Panned out pretty well. Here's what the Kiwi Yen looks like on the 30-minute. All right. So that momentum never cleared 60. The support trigger that was on that report did give out well ahead of the actual drop and collapse that you saw back later in the night towards the central session or towards the middle of Asia Pac. But this was a clear-cut trigger. Stops against the highs. Again, the ATR here grants you a 33 pip ATR per scalp. Okay, quarter of the daily ATR. So right off the bat, you're looking for 33 pips. Really good stop. First target was 85 handle. Second target was 84.60. That's the opening range low for the week. Third target just got missed, and that was at the 83.99. We basically bottomed off at 84.06. Okay. So you're probably thinking to yourself, Mike, well, what the hell do we do now? It broke the opening range low, and we're right back above it. It invalidates this. Okay, it invalidates this as an operative opening range trigger. Doesn't mean that the opening range is now null and done. Just that means that this break as the opening range low is not going to give us that downside bias heading to the end of the week just yet. Okay, I'm still going to respect this range as the initial opening range. So if we do get a topside or a support trigger break or an opening range break or something that puts us on the short side, sure, I'll still play it. But right off the bat, I don't want to just maintain that downside bias based on this crack because it's been invalidated that session. This was just a spike low and a pullback. That's different. But we spent some time down here. Okay, in fact, we spent a couple of hours down there. So that's one thing to be mindful of. On the rebound, on the rally, look where momentum is finding resistance. Not only is it that 60 region, but it's also the former support trigger, not resistance. Okay. If this holds, you're still looking to hold the short side below 85.65. 85.65, 85.72, this region right here. Would you have taken that long on Kiwi Yen when RSI bounced off the 40 region? No, I can't say I would have. The long I would have taken on this one, Eileen, would have been this long. That's sort of the trigger I would have used. Wouldn't have been my favorite, but why would I have used it? A, because it has 3 reference points. I mean, it doesn't look that way, guys, but it's pretty messy. But it does have, if I adjust this properly, you can tell I'm a little anal with the charts, guys, so you're gonna have to you're gonna have to bear with me. Okay? Even if it has 2 reference points, the point I'm saying is it wouldn't have been this dip that would have got me long. It would have been this break. Okay? And why? Because it broke the trigger in price. Remember, you're not just ever looking at triggers in RSI. An RSI trigger in and of itself means nothing. Absolutely nothing. It has to coincide with something that's happening in price. So for me, the operative trigger, honestly, it probably would have just been this. I know I keep moving it around here, guys, trying to find what matches better, but my computer is so lagged. Okay, even if it was something like this, the operative trade or price would have been the break back above 85, 84.60. Okay, this move here. Especially because you came back, tested as resistance, a trigger break above 40, or whether you want to use this trigger or the trigger break above 40 in and of itself would have put you long again. Initial targets 85, secondary targets would have been right around here. If you're looking to play those recoveries, be dynamic with your analysis. Okay, quick retracement off the highs will typically give you some nice targets to run into. All right, so that break there would have what put us long. Initial targets would have probably been, again, 85. Not only was that soft target we highlighted, but it was 50% of the move. Second target, 85.20 and 85.50 here. So that's how I would have played the long side if I was looking to play the rebound. But on this trade, since our broader bias is bearish, this was the trade definitely that would have been the operative move here. Eileen, does that make sense? Good question. I'm not saying that there's not opportunity to play that rally. I'm just saying that you can't just play it based on a trigger break, especially when you're fighting the trend here, Eileen. I would have definitely needed to see that thing break back above 84.60 before getting comfortable on trying to fade that move. All right. Eileen says, okay, see that? Yes, that makes sense. Saw price action, resistance, then 2. Okay. So that is, my friend, Kiwi Yen. Remember the broader picture of Kiwi Yen? Okay. I think Jamie's following this one just as closely as I am. Okay. So that's that wick that probed into the lower median line parallel. Here we are way back off the lows again. The operative trade still remains bearish below 85.85. And if that breaks, it's not like the whole trade's going to reverse. Just says, hey, near term, look towards the correction, look towards 87.50 on the upside. That being said, that's our bearish invalidation level right there. And the weekly opening range high. So everything fits together really nicely here on the Kiwi Yen. Question? Concerns? Comments? Okay, this is kind of the slope I'd be looking for the momentum here. And I'm just going to bring this into a 5-minute chart, see if there's anything operative. And there is. All right. Okay, that's the operative trigger you would want to look for on the 5-minute chart. On a breakdown, Stop will be against the highs any way you look at it. Also, on a relative basis, just to see if that high actually represents anything, bear with me one sec, guys, and let's see if we've completed any type of meaningful ratio off that high there. Yeah. Okay, I think we're just trying to fit this. Levels look good. We'll stick with the level. I don't think there's anything on the near-term 5-minute chart here we'd want to stress that's jumping out too much at me. Okay. Not a time I'd start jumping into positions. Obviously, we're heading into the U.S. Open at 9:30, so we'll see. You could probably get that another stretch into 85.72, which might offer some nice entries. But just a quick zoom out here. For those of you who are following this trade, feel free. At any time during the webinars, guys, I say this all the time, but just for new guys, there is a camera in the top right-hand corner of your GoToWebinar screen here. If you click on that, it'll allow you to take a freeze frame of any of the charts that you see here. The 886 fib retracement off of the RBA drop, says Aaron. Yeah, right here, 85.58. Yep. Well, right off the bat, that was the support trigger, or that was the opening range low for the week, right, Aaron? So that was going to be a level that you'd want to concentrate on either way. So that dribble right there, I'm not really going to stress. Still looking lower. If this holds at 60, guys, that is an ideal type of scenario. And if the 5-minute breaks sub 70, that might be a decent trigger in and of itself too. Yeah, so shorts right now, if you take any short exposure right now, it would be against 47. Your initial downside target would have to be 85. So it's a little too tight for me, but it does look like you get a little bit of a correction to the downside here. It might be worth a press into 85. If not 85, maybe the 84.80 level, which is going to be those highs that you stretched into in early Asia Pac. Looks pretty good actually though, guys. That comes up anyway, 85 into 85, 84.95, and the 50 comes in right above these highs. So those are the two levels I'd be looking at for short exposure if you're holding anything against that high. Okay, moving right along, that is the Kiwi Yen. I just didn't want to do a quick note on gold. Sterling CAD is something we'll talk about real quick. Guys, I mean, I hope you guys read the report on or the update on Sunday night, because what a pullback it was. So, you know, we've remained constructive on the trade. I actually tried to fade this, guys, if you remember, last week as we were coming into this region here. I was caught on the short side thinking that we'd get a little bit steeper of a correction. We got stopped out on the break to the upside. And then we've continued to favor the long side ever since we broke 88.65. Now, to start off the week, as we came into Sunday, here's what the chart looked like. Okay? Yeah, this really strong, well-defined channel on the 30-minute that's been holding for a few weeks. The daily was right in this major key resistance range, 91.15 to 91.96 key resistance. And we said, look, you know, at this point, the trade is obviously to the upside, okay, but there is a high risk of a pullback here with downside targets at 90.10 and 88/88.30. So on Sunday night, you know, you noted that was a major key resistance level momentum, not necessarily our resistance because we're above 70. Remember, as long as it stays above 70, the market can continue to run. But you also had the resistance trigger as well, which was holding there at the highs. Okay. We moved into yesterday. That high momentum held the resistance. and price completely collapsed right past the 190 target and completed a basic 236 off that low, and that's 88.65. Okay. A little adjustment for a near-term pitchfork here. Also has a tag of support with the lower median bound parallel, but also the median line also caught that low to the pip yesterday, 88.65. Okay, so where does that leave us now? Well, 88.65 is going to be that 236. That's the opening range that we're going to use for the week. Here's what the near term looked like. There's that channel with a clear trigger break, clear as day. You had a momentum trigger as well. I'll show you in a moment that also broke. Downside target's 190. Like I said, 188.65 was a 236. Here's what the live chart looks like for Sterling CAD. All right. Oh, I hate when I move my fibs by accident. Sorry about that. Okay. In any event, there is what it looks like on the near term. Near term support is still going to be 88.65. A break below that will be a break of the weekly opening range. It'll be a break of the median line parallel. It'll be a break of a basic 236, and that opens up downside targets. First at this former median line resistance, which could offer some support. That's like 187.90, not too far off. But secondly, you're basically looking for a drop back into the 2014 highs, 86.68. Okay. As a disclaimer, I don't have any exposure on this last night. I did have a quick run on the downside when it did break. I only caught about half the move, though. Here's what the scalp looks like for Sterling CAD on the intraday. Right here. Okay, so you had a couple of opportunities to actually get out. Here's the operative trigger, guys. And yes, we did get a blip and a tag of this right below it last week, but that doesn't negate all the other tags. And I'm talking about 1, 2, 3. Okay, there's 1. Whatever, it broke. Quick false break. You get those all the time. Momentum held or price held support. So we're not going to do that. Count that one. But 4, 5, another probe. This was the break. And this break below that operative trigger line happened exactly on a break back below the not only the initial weekly opening range, but more importantly, that trendline support that dates back to the lows we made in January. All right, so the trigger here was really, really well set. Again, for sure a wider range scalp. You're looking at 53 pips, a quarter of the daily ATR. So you had more than enough time to try to jump into this one. Initial targets, like I said, 190. There's that 88.65. So at this point, this is what I'll be using as the weekly opening range. I do think this puts us into a correction stance. And guys, don't take my word for it. Here's a quick lesson on ATR, or on RSI rather. Look at the momentum signature since that low. Right? Break above 60, break above 70, 40 hold, break above 60, 40 hold, break above 60, 40 hold, break above 70, 40 hold. This changed things with the break below 40, for sure. Right? Definitely changed things. The first break below 40 we've seen in over a week and a half. But you know what's more important for me? This hold at 60. This hold at 60. Okay, that's telling you something. That's telling you something. So, our bearish invalidation level will bring down for the immediate time frame to that 190 handle. If it does break above 60 in momentum, and you do see it break above 90, it's a wider range scalp, guys. I'd be off the shorts. I wouldn't even be looking to hold that if it breaks. You possibly get another re-entry somewhere near 91.50, and in that case, if you do see that topside break in that type of scenario, again, be dynamic with your analysis. Go ahead and reset it. Okay? Look what happens when we draw that. Completed basic 38.2. Okay. So make sure that as price is developing, guys, we're being dynamic with our levels. I do like the short side below 190. We need to see a break and push below 88.65 to really get this thing going. Inevitably, on the longer time frame, we would be looking to buy this dip. Right now, scalp bias remains weighted to the downside, though. Questions on Sterling CAD? I know I've been getting a little gutsy, guys. I'm putting out these putting out these scalps that have like 50, 60 pip ATR ranges. But listen, if the setup there is, the setup is there. So we'll continue to favor the downside sub 190. If you see a break sub 88.65, like I said, watch that trend line, but you're inevitably looking at the 2014 highs. Okay. And again, just take a look at this. It could be a simple correction. This does look to be like it could be a 1, 2, 3, 4, 5. So if you're looking to play some sort of ABC or some sort of truncated correction to the downside before we correct. But that's sort of the stance that we're taking right now on Sterling CAD. All right, last but not least, which has been moved to the watch list, Aussie CAD and gold. So if you guys notice, I made a watch list here. These are trades that we're still following, we're still tracking from a scalp standpoint, but not necessarily interested in actually operating in. And I just do that because if there's nothing to update on these guys, I'm not going to sit there and update a scalp that's not really in play. So I'm going to move them down to the watch list. Gold does have a very interesting play at this point. I think you need to really watch that 62, 68 barrier. The gold pullback that we saw last week faked us out. And I'm going to be the first to tell you that I got faked out. Why? Because 62 into 68, 1262, 1268 was our bullish invalidation level. Okay? Now, we ran through it last week. We tagged 200-day moving average. And once we popped right back above, I went back into a neutral stance. You didn't want to stay bearish because we were right back above that level. And with that said, still, 1262, 1268 remains the bullish invalidation. So again, if we break below this here today, I would be looking for a move back into that 200-day moving average, back into 1250. Long story short, the broader trade, in my personal opinion, still remains constructive above this region here. Okay, so you might get a little bit more of a pullback into this sort of play before you assert the long side again. And that would coincide if the dollar does finally give us some sort of near-term correction. That being said, even near term, you're constructive above 1263, 1262, this region right here. So I moved on to the watch list because I'm not really, I don't have any strong indications here for me to try pressing along even against that 200-day moving average from this level. But at the same respect, the broader technical picture for me still, I think you need to respect this pivot right around 1262, 1268. So quick note there on gold. Also on the rebound that we saw off of that pull back above 1262, 1268, look where momentum reversed right at 60. So, in fact, the gold trade could be turning over near term. Even if it does, I still think you play it as a correction. But I'm going to sit on the sidelines here for bullion over the next couple of days. All right. So that's gold. And we'll do a quick gander here on Sterling CAD or Aussie CAD. Then we'll take all your questions. So I don't really want to follow this one anymore. I think it's getting kind of messy on the intraday chart. The daily focus as we opened up the week was 99.16, excuse me, 99.10 to 99.27, this region here. It was backed by the 200-day moving average. And it was going to be our near-term bearish invalidation level. Well, we probed right through it. It looked like it was going to break, and then it kind of reversed, and it's getting a little messy. So I think you play the pullback. If you're hell-bent on trading the Aussie CAD, I would be playing the short side near term. That being said, I don't really know what to do with this. Again, it's a wider range scalp, so you do have that flexibility, but this kind of faked me out yesterday. We probed as high as 99.68, that we came all the way back down and held. The upside bias definitely is at risk below this region. To play the shorts, I actually didn't look at this morning. It probably had some ample opportunity and triggers, but let's see what the intraday looks like. So we've now completed deeper than a 618, and we found support at former resistance. Momentum back below 50. Here's what the intraday looks like for Aussie CAD. Okay, so this scalp chart that you're looking at here was on or featured on the page last week. Okay. Remember, as we opened up the week, this is one to keep as our bearish invalidation level. Well, what happened? We broke right through it, and then that same day, we closed the session well below it. So that invalidates the upside break. The opening range low was 98.30. This is really, I guess this is after the close of trade yesterday, really what solidified the downside. Weekly opening range breaks. You come back, test the underbelly as resistance, and you look lower. So at this point, it might be worth taking another look at this near term. Let's just zoom out real quick. Oh, that extension is wrong. I'm sorry, guys. That's hard to be looking at. Yeah. So actually, this level's huge. These, speaking from strictly a Fibonacci standpoint, these are going to be always very critical levels in my personal trading. Is going to be 100 off the high, 618 overlap off the low, or vice versa. So 618 of the advance matches up with 100 from the decline, or a 618 of the rally with 100 off the high, or 100 off the low rather. These, in any event, will typically be pretty big regions of resistance and support. You can see near-term price action. You sat there, support, break, instant resistance. I think near-term below 96.66, you want to be cautious about the long side. That being said, the trade is bearish while below 98.30, and I know that's a huge region from where we are right now, guys, but if you're trying to be objective, that's the objectivity of it. So looks like you have a resistance trigger here, which it gives out. Might see this thing give us a little bit of a correction. No divergence, but yeah. Even if you see this topside break, you look to sell that rally. If you get back into 97.38, 97.40, might be actually a nice region. Also, on a correctionary break, if we do move higher, best thing to do is just tack on a quick retracement of the weekly range. And that'll give you some objectives, topside targets, 96.7, basically 97 is what you'd be looking at. All right, just for the sake of trying not to get this cluttered. This retracement is null and void. This extension's in play. Oof, even tighter. That's no longer a stress point. All right, and that's what I'd be looking at. It actually looks pretty interesting now that we redid the whole thing. Okay, that's not necessary either. It's null and void. All right. So if you want to take a freeze frame, take a freeze frame. I'll throw this up on the intraday page as sort of a back burner. Some things still I'll keep on the watch list per se. I don't know if I'm necessarily really eager to play on this one. Sterling CAD still seems like a better deal for me if you're looking to try to play the CAD, but these levels look pretty decent right now in the near term. And here's what the zoom out longer term sort of approach looks like. Hey, Stefan, more than welcome, man. Says huge thanks. You're more than welcome. So that's the Aussie CAD. Again, it's on the back burner as a watch list right now, but we'll see how price pans out. The real major play after today's drop now is going to be whether we see that rebound off that former trendline resistance off September high and give us some sort of sharp correction, or if momentum were to come into this region as price came into this key region here, might be another opportunity to find another high for this. And on the scalp chart, I already know we have this, but let me just see what it looks like on the daily as well. See if the 1618. And there's that key region support. So we'll see if that holds. Mark has a great question. Says, hi, Michael. Could you describe your daily routine for trade setup filtering? And how do you decide which 2 or 3 to focus on at any given time? That's a great question, Mark. I wish I had a clear-cut answer for you, man, this is just one grid you need to look at. But it's not that simple. For me, Mark, it's all about the setup. So obviously, I'll take a quick glance, on a basic ATR gauge. So on Bloomberg, you can bring up sort of a matrix of all the ATRs. I'll typically take a quick look on what's moving the most. But to be honest with you, Mark, it's all about the setup. So I literally finger through the majors, see if there's anything interesting on the majors. If there are, I'll check the crosses on that major. So, for example, if we're seeing big moves in dollar CAD or we're seeing big moves in dollar yen, that'll actually get me looking on all the yen crosses. And for me, again, my charts are set up as such. These are the daily charts, and these are the intraday charts. So I'm typically going through the daily charts, seeing if anything's approaching any interesting levels, any interesting formations. And then if the daily chart's appealing for me, that's when I'll start to drill down into the 30-minute. For the sake of SB, obviously once I come up with a scalp or the setup looks good and I post it, then it's just following up and updating that specific trade setup every day. Also, Mark, when you're looking to sort of filter in what you want to keep your focus on, a huge part of it, which we don't talk about a lot here, is going to be the economic docket. What has the biggest event risk on tap for it? What will be the biggest reaction? We'll see the biggest reaction rather to a given print, and that'll sort of help me focus my attention on what pairs I want to look at as well. But Mark, it's purely based on the technical setup for each trade, purely. I hope that answers your question, Mark. I mean, let me know if that helps at all. Eileen says, how closely do you weigh the U.S. dollar crosses action when looking at the specialty pairs you are watching? For example, what the Aussie dollar does and doing what the Aussie CAD when looking at Aussie CAD. Mark says, thanks. Do the work and pay attention to the details. Yeah, unfortunately, it's a lot of work, but it definitely pays off when you're focused in the right areas. Eileen, I do take it into account. I don't put it, I don't stress it too much. So Eileen's question is, when you're looking at the Aussie, for example, how much does that influence what you're looking at with the Aussie CAD or Aussie Yen? And that's, goes along with what I was just saying. It'll definitely can add color, okay, can add some clarity to the trend. So, for example, if I'm seeing Aussie dollar really take a dump, and I look at the Aussie crosses, and the Aussie crosses are, well supported, or not seeing that magnitude, that it's a little bit more of a dollar game, and that'll push me more towards the dollar pairs. Where if Aussie dollar is not really seeing a big mover, but you're seeing huge moves in Aussie Yen, huge moves in Aussie CAD, then I'll start to focus more on the Aussie crosses. To answer your question, Eileen, it's something I take into account, but it's not something I work with a correlation type of move. So it's not like if I have a really nice setup on Aussie CAD, I won't take it because Aussie dollar is doing something opposite. Does that make sense? Certainly, if it does, move with it. That's adding conviction to it. But very rarely will I say, oh, this Euro-Oz trade looks great, but Aussie dollar is doing this, so I won't trade it. That's very rare. But the one thing I do want to say is this, you don't want to put all your eggs in one basket, meaning if you have exposure on Aussie CAD, if you have exposure on Euro-Aussie, taking a Aussie dollar position in the same direction probably isn't going to be your best idea, right? Because you're kind of really loading up on the side of the Aussie. So I try to keep it separate in that I don't want to load up, I don't want to be short Aussie dollar, long Euro Oz, long short Aussie CAD, all these things at once. So that's how I'll take that into account. I hope I haven't gone off topic, Eileen. Hope it helps. Says, oh, okay, good to know, on their own merits. Yeah, so every trade's always going to be on their own merit. Absolutely. Tuttle, sir, good to see you. Says Sterling Key Daily. The 126 breakaway gap move up is right at the 88.6 of the September high. Sterling Key Daily. The 126 breakaway gap. move is right at the 88.6 of the September high. Yep, you're absolutely right. You're absolutely right. So this is actually really interesting in sterling key today for a couple of different reasons. You have an outside key reversal. Okay, so this is highs we haven't seen in over 3 months. It's taken out yesterday's lows. It's taken out yesterday's highs. And on account, if we look at a near-term chart, this is actually going to be a break of the weekly opening range as well. I do need to see this thing close above 208.48. I want to note the high day close for September, which actually we just surpassed but came back. And based on that, this is a pretty... Oh, did I not choose close? This is a pretty big range based on that. Okay, so this is a multi-year high. This is a daily chart, by the way, guys. So this high hasn't been seen since 2012. Let me see what that... Stop traffic. Guess what 209.10 is? It's also the 2012 high day close. That's ridiculous, actually. Wow. If that doesn't excite you, you might want to check your pulse, guys. But that's a pretty big region of resistance, especially when you have multiple multi-year high day closes. And that all lines up at 209.10. So that's the rock solid resistance. A little remark here on these outside reversal days, guys. These can be great tools when used properly. An outside reversal day to the downside at a major key resistance, I will take that short 9 times out of 10. Okay, based on the merits of the trade, obviously. But an outside day reversal to the upside at the highs, a lot of times this can be exhaustion. Okay, you get the correction break below support, fakes out all the long guys. The pullback offers a great opportunity for people who try to press this one more time. It flies through the highs, okay, and then this thing completely falls apart and gives you a little bit more of a steeper correction. I don't know if that's going to happen. I can just tell you that these outside reversal days to the upside at the highs can be very tricky. So I just give you a quick stand back moment of caution here on this one, Tuttle. I wouldn't do anything on the long side unless we close above 209.10, again, on account of both of those yearly high day closes. That being said, to even try to press this short now, the opening range is so big that I don't even know I'd want to do anything on that front. But if we do see this thing level off and the opening range for the week does break to the downside, you want to tack on a quick retracement here to see if, what your downside targets would be. Tuttle saying, yes, I was thinking time to look for shorts. I'd be agreeing with you if we close below 209.10. If we close above 209.10, I don't want to be fighting it, Tuttle. In fact, this is the first 60 break we've seen in momentum since way back here. And look what that break did, right? So, caution is definitely warranted here. For me to try to press a very strong uptrend like this would really take something significant from a technical standpoint to really warrant the short exposure. Let's take a quick look while we're here on the intraday chart and see what if that offers any guidance. Okay, so here's the weekly opening range. Let's get that 209.10 region. We don't need this. Okay, this is probably the operative pitchfork I'd want to work with. This one was pretty tight until we broke out the pullback, not finding support or resistance, so I'm not going to stress this one anymore. But I am going to continue respecting this one. So you see that pivot there, really nice reaction at it. Okay. And Tuttle, once we get some conviction, okay, let's say this thing breaks back below the opening range high that we set forth yesterday. Let's say it goes back below 208, right? On a short type of play, man, a retracement right off the lows. And I know this can get messy. I just want to see what it looks like. Woo, it's clean. It's clean. All right, so that's in the scenario that we break back below 208. Your obvious initial target's not going to be anything beyond the opening range low, okay, for the week, which just happens to be exactly at that 236. So I'm going to go ahead and get rid of that extension at this point. That 50 is good. 786 is good. 886. No, it's not going to do us any good. Wait for the momentum signature to turn over. You have divergence into these highs. Remember, guys, we're looking at the close, right? You're not looking at these wicks. Bring it to a line chart, higher high, lower high. So you are getting some divergence into these highs. On a scalp basis, if you get below 208, stop against 208.37, maybe for a run into the opening range low for the week might make sense, Tuttle. I just want to make sure you're super nimble on this one until you clear the opening range low for the week, and I think that's when you get the conviction for a little bit more of a steeper turnaround in Sterling Key. So I hope that helps, my friend. Really interesting pair. Tuttle says, this is really helpful. Thank you, Michael. Hey, more than welcome. Guys, I'm well over my hour threshold, so I do want to thank everyone who attended today. I will have this archived for you and up on the site in about an hour or so. It takes time to render, but we'll have that posted once it's done. Brian says, showing your screen layout helps to see how you guys view the markets. It helps to give a good foundation to start from. Appreciate that, Brian. Eileen says, thank you for the extra time. Have a wonderful day. Same to you, Brian, Jay, Eileen, Tuttle, and the whole gang. I can't get through everyone. Stefan, Pooja, thank you so much for your attendance. Tiffany, we will see you bright and early tomorrow morning, 8:30, for another intraday strategy webinar. Hopefully a little bit more of these will be in play. I'll keep you updated on the squawk for any changes to any of our biases and positions we might be looking at. Have a great day trading, guys. And don't forget, tomorrow we'll have ADP during the release, so we'll get that out on the mic here during the session. Should be fun at 8:30. See you then. Best of luck trading. Cheers.